Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Wednesday, the Australian dollar surged amongst the other currencies. As we can see, the market rallied on to that 60-cent level, close to the key level of 67.4045. The whipsaw price action came after a weaker than expected US CPI data, prompting market bulls to test the topside level. However, it fell short of its target, as mentioned, of its 67.4045, while the dollar index, which measures the greenback strength against a basket of six major currencies, fell from 105.25 and closing in New York at 104.70. In May, the US Consumer Price Index showed no change, missing the projected 0.1% increase, while year-over-year, CPI growth came in at 3.3%, below the expected 3.4%. Along with that, additionally, the US Central Bank maintained borrowing costs unchanged at a 23-year high, between 5.25% to 5.5%. However, the US Central Bank did hint of a possible rate cut or two coming this year. So with the top side still in focus around that 67.4045, any pullback should be brief and looking towards the support level seen at 66.20 and the key level where the 60-day moving average is as well at 65.7080. The euro surged as the dollar weakened on the back of the cooler than expected inflation data in the US. Looking ahead though, we've still got to come the PPI and also the unemployment claims in the US, which could again drive much volatility. Turning to the technicals, it is assessed that the upside move should accelerate onto 108.8090 if we clear this level around 108.25. I do like the way the market has shaped up and rebound and filled in the gap after the 3-day weakness, and therefore any pullback should be temporary around 107.2025 to around 107.5. The dollar yen also weaker as it backs away around that 157.5. Technicals are still somewhat weak and therefore I'm still holding the call to the downside and expecting to move to the 156 to 155 area. And the broader call still maintaining below around 150 to 151. Sterling also put a whipsaw price action and surged to post a fresh high since early March around 128. I like the way this pattern is holding and therefore could see further gains into today's session, while also waiting for next week's Super Thursday, which is the Bank of England's rate decision. And also along with that, we get the UK CPI too. Any weakness should find support close to the lower side of the range, around 127, figure 25. Having taken the challenge to the upside, gold is somewhat weaker again and posting a negative bias, and into today's session could see further to the downside and look towards the region of 2,300. In light of how the market recently performed to a negative bias, I'm still holding the call down to this key level of 2,250.70 and reassess from there. Wrapping up with oil, well, the market was also whipsawed and now a little bit cautious to how the pattern's holding, but I still believe the market can actually rise further, and breaking above $78 a barrel could push on to 79.30.45, where I do anticipate profit taking and see a rejection from there and look back towards the lower side of the range around $75 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday pull, and I hope you enjoy the great day ahead.